Yeah, I think this is a buying opportunity, but it comes with a pretty big but.
Tesla's quarterly earnings report is out and the stock is dropping as investors react to this news. Join us as we break down the earnings report and what it means for investors and their portfolios. Let's dive in. Tesla's stock price is tumbling after Tuesday's earnings report. Thomas, Chris, let's talk about this slide that's underway. What is going on here?
Well, right now the stock is down from its recent highs. It's near the middle of a long-term trading range, but it's below the midpoint of that range, which I think is a significant sign for the market. This shows resistance. The chart is showing resistance at $240 level. I expect that level to cap gains for the foreseeable future.
Yeah, Tesla stock, I mean, this is Tesla. It's not immune to seeing big price swings. It's one of the more heavily traded stocks on the market. But it's clear if you look at the long-term chart on this that the stock's been in a general downtrend since the beginning of 2022. It may have hit some sort of a bottom in January of last year, 2023. But the bulls, like Thomas was saying, the bulls are having a really hard time getting any sort of traction here, and it's finding resistance at key points, and it looks like it might be trying to find resistance again. So, um, yeah, not a great week for Tesla shareholders.
Now, you mentioned that it's kind of been a general downtrend here for a while now, but this further downslide has began right after the earnings report was released. Thomas, what is the main news in the report that has investors backing down even more?
Right. So with this report, the company returned to growth, and that's good. But the growth was weaker than expected, and the weakness was in the EV segment, which is the company's main segment. This is 78% of the business, so it's pretty significant that the revenue decline outpaced the volume decline, which shows the impact of pricing. That goes into the margins. The company has been cutting its prices in a price war trying to spur sales. That's hitting its margins. Spending also increased. There is the Musk factor in play. The future should be good. But right now, this is a car company that's contracting, and that's real bad for the stock price.
Now, I do want to get into that EV sector a little bit more here. Why is demand dropping so much across this industry?
Well, EVs are not an idea that's ahead of their time, but it's certainly ahead of the market's ability to support it. Now, I say that, Lacey, but there's some commentary that says the EV sales are actually fine. It's just that you've got rivals like GM and Lucid and Rivian that are taking market share from Tesla. They're pointing to things like GM reported a 34% increase in deliveries between Q2 and Q1, but I'm not necessarily sure if that's stealing market share or if that's just consumers who had placed pre-orders, they had placed deposits on it. Now they're taking delivery of those vehicles. I don't know if that's a sign of organic demand for new EVs coming off the line. Um, we need more infrastructure in the country, charging stations particularly. Um, you see a lot of people say, well, you can go from New York to California. All you have to do is plan your trip and they show the map and blah, blah, blah. You hear, stop here, here, and here. If you're doing that, you've already lost the argument. I mean, the fact of the matter is people don't want to do that. They want to be able to make
Right.
sure that when they get in the car, that they're going to be able to find a charging station as easily as they can find a gas station right now. That's not happening. That's years away from happening.
Right.
And then I just say finally, investors may not like to hear this, but it's a real thing, and that is that in general, Americans don't like to be kind of told what to do. And right now, it kind of feels like Americans are getting choices taken away from them and being forced to buy certain things. And this is, I think, a natural reaction against that.
Right. I think Chris hit the nail on the head. There's just too many hurdles to use. All the early adopters that are really into the green movement have already bought their EVs. The range and the charging is only part of it. Um, there's also the cost of maintenance. These cars are significantly heavier than regular automobiles, so you wear your tires a lot faster.
Yeah.
And we got to remember that EV isn't really a new industry. It's not going to grow up alongside of the car market. It's really a revolution. So the long-term play is to see EVs taking over the share of the already existing car market, which is more of a shift in manufacturing than it is the growth of a new industry.
Now, Thomas, you wrote an article for MarketBeat earlier this week, and I'm going to go ahead and get that linked down below for anyone that wants to read into that. But you had mentioned margins in this article. Walk us through this. What are Tesla's margins looking like right now, and why might that be a problem going forward for this stock?
Well, so the company still has a positive margin. It's still making money. However, the price wars and the price cuts cut significantly into that margin, was compounded by increased AI spending, which resulted in like a 45% contraction in their earnings power. Now, that's huge. Stock prices are based on the power of earnings. And if the earnings are contracting, the stock price is going to contract. Now, the AI spending is good because one day it will pay off, but when and how much, right? So right now, that's just a headwind for the stock price. The company's struggling to make money, and it's spending a lot of money trying to get itself set up for the next phase of growth, which also may not come around as quick as they had originally said, because in this report, Elon's already pushing back plans for the robotaxi. Expect that to happen again.
Chris, what do these types of margins mean for investors and their confidence in this type of stock?
Oh, it has so much to do. As Thomas was saying, earnings are everything. I mean, when their margins are contracting, that means they're making less profit, and the stock price flows right away from how much earnings growth there is. And right now, Tesla, it's right for investors to wonder where that growth is coming from. Some people believe it's going to happen in the energy storage area, especially as data centers need to be built out. But there's no indication that right now that that's happening.
Now, analysts sure have a lot to say about some of the statistics that you've both just shared with us, and we're going to get to that in just a second. But first, here is a tool that you can use to stay on top of all of Tesla's moves as well as the stocks in your portfolio. Let's take a look. Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates, stay informed, and stay ahead. So we've already seen some major moves to the downside on Tesla stock this week, but what are the analysts saying about this outlook and the forecast of Tesla's share price right now?
Well, this is pretty typical after Tesla reports earnings. Analysts have been really quick to register their opinions. There's a ton of ratings already that come out on that you can find on MarketBeat. In general, the report is mixed, but I did see a couple of notable downgrades yesterday to go along with some lower price targets. So I would say overall the sentiment is neutral at best and slightly bearish.
Right, I would agree with that. Right after the report, most of the revisions were negative, but there have been quite a few more to come out since then. Very
Yeah.
much mixed action. They're still rating a hold, but what I'm seeing is the price targets are narrowing. They're narrowing to a range around the previous consensus, which still implies some downside for the stock. If nothing else, it plays into that idea of gains being capped.
Now, with everything going on with Tesla, does this represent a buying opportunity for those who might be seeing Tesla stock decline right now, or what's your take on this?
Well, yeah, I think this is a buying opportunity, but it comes with a pretty big but. We're talking about Tesla. This is a volatile market. Um, we didn't really get good news. This was bad news to me. We've had fairly bad price action since then, since the report was released. I think this stock could move lower. I mean, today it's showing some support, a little bit of rebound from the the big sell-off, but I still think it could move lower. The analyst response is mixed. They're kind of firming up their sentiment, but they're not really expecting a big move anywhere. Unless proven wrong by the price action, I would say that waiting is the best thing to do right now. It's a waiting game to see if and when Tesla will be able to follow through on its next big win. When we start getting some news about that, we may see a bottom come into play. Um, but like I said, I think right now we're just waiting to see what happens over the next few weeks or months is probably the best thing to do.
All right, so we're in the waiting game right now, but Thomas, you're typically one that's pretty good at calling a bottom. Can you call a bottom to this decline? How soon could we see this happen?
Well, I don't know if I can call the bottom, but there are some pretty firm targets for support, and I'll show you those on the chart. Right, this is a chart of weekly prices. What you can see here is the big run up in 220. This was driven by the EV boom, the SPAC boom, all the EV OEMs, also driven by Tesla's lean into profitability. Up here at the peak, this is when Tesla was producing the biggest profits, had the best outlook for profitability. But since then, the entire EV market has been selling off because demand has slowed. And in the case of Tesla, its profitability has been pinched. So right now you can see there's pretty clear resistance right here about the midpoint of the range. I think that'll cap our gains for the next couple of quarters probably. As far as the bottom goes, I think that the bottom is going to be somewhere down here in the 150 to 200 region. We're showing some signs of support right here above these moving averages. I don't really count it to hold. I would expect to see the market retest 175, if not move lower. So my advice would be to wait and to try and target an entry around this level, but I still wouldn't be too quick to get in because more bad news could come out. They could sustain decline in car sales. Other hiccups could emerge. We could possibly see it set a new low.
Well, thank you both for diving into Tesla today. We're going to continue to follow Tesla and this news right here at Market Beat. But for now, happy investing.